Hello there, currency traders. This is Rob Reinhold. I'm joined by Ankit Sharma, and we are getting into a Thanksgiving trading week. So we will be talking about what typically happens in this week, because this week and the last 2 weeks of December tend to be very similar in the price action. Let's jump into it. In this session, we're going to be talking about what happened this last week. We're going to look at all the broad markets. Then we're going to go through our currencies and score them all from +3 to -3 for relative strength. And then you know what we do. We pit up the strongest versus the weakest, and those are our currency pairs for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Before we talk about the markets, I'm very happy to announce that our Vegas summit is going to be happening next year, April 26th and 27th. Now, this is something we did every single year at Maverick, starting in, I want to say, 2010, something like that. But then COVID hit, and we all know what happened with COVID. We were set to be in Chicago in 2020, and COVID shut that down in the spring. The next year, we had the Omicron, boy, what was the name of the variant that hit in 2021? And so we canceled the 21 one as well. We had our summit in the 2022, and we had it in Las Vegas. And then the next year, inflation was crazy. So we said, hey, let's not do it. And same with this year. So we've been on pause here for 2 years about our summits, but we're happy to be bringing them back. So this next one is going to be in Las Vegas. We've done Las Vegas, we've done Chicago, we've done New York, but we are back to Vegas. It's going to be at the Luxor Hotel. We will be sending you all information in the email this weekend about it, and we will be having, of course, more details to come. So if you are interested in this, put it down on your calendar. We wanted to get the dates out to everybody so you can start to plan this out. It's going to be the last weekend in April, the 26th and the 27th. More details to come. All right, let's talk the markets. Equities went higher. The market is still in a good mood from the election, and it just seems that any type of pullback, and we'll take a look at the candles of this week, and this was very clear this week on candles that every pullback, there were buyers there. So we saw equities continue to go higher. Dollar, 8th consecutive weekly gain. Crazy. That's a huge gain. And just week after week after week. And when you take a look at the rest of the world, again, there's no surprise that the US dollar continues to go higher. But yields did not go higher. Yields are just really pinned at the 4.4% on the 10-year. So we'll be talking about that. If yields start to go higher, it's probably going to be a problem for the equity markets. But again, not for the dollar. The dollar still looks like it wants to go higher. And then, boy, Bitcoin. Bitcoin had a huge run after breaking all-time highs around the 73,000 area. And now we are at 99,000. We'll see where it closes today. But 100,000 is going to be there. Now, I've been around for 27 years in trading, and there's been a lot of these milestones. You know, I remember when the Dow Jones hit 10,000 for the first time. I remember when the S&P hit 1,000 for the first time. I remember when the stock Apple, hit $1 trillion market cap. What happens when you have these milestones is that everyone kind of gets behind. They all want to see Bitcoin get to 100,000. I fully believe that Bitcoin will hit 100,000 somewhere here in the next day or two. I think that is just a foregone conclusion because everyone sees it. Everyone wants to see that print. And so what happens is the story gets behind it, the volume gets behind it, and then once it breaks, everyone cheers, everyone slaps some high fives, and then there's nothing after it. Everyone had already bought to see that, and so there's usually a fall off in the price. Now look, I'm not saying there's going to be a big sell-off. What I'm saying is there's probably not going to be a surge past 100,000. Now, there will be for probably 30 minutes or an hour. There's no question that it's going to shoot past 100,000 and some short covering is going to push it even higher. But after that, I think we're going to see Bitcoin is going to fade off from that 100,000. Ankit, you've been trading now for 15, 16 years. How many times have you seen this where they've got this milestone and it hits it and then everyone's out of gas?
Hey, Rob. Well, yeah, I mean, I've seen so many milestones. And again, I think there's a lot of emphasis that gets played on this, but like you're 100% right. Like once we cross that, like now we start talking about what's the next level. But usually that level is I would say that it's not just the one hard line level. Like sometimes it will go a lot more higher than you would think. But yeah, I think once we achieve that level, there's a lot of people that are kind of waiting for that to happen to sell maybe as well. So I think, yeah, there's a lot of emotions involved at that time, and that would generally go a little bit higher. But I think it's important to kind of think about, okay, what's the next level? So once we break the 100K, I think market has to figure out what's the next level. But I think until then, we'll probably see, we have clearly seen Bitcoin going parabolic. And anybody that has not seen things go parabolic, this is what we call a parabolic move. So parabolic moves usually end with a blow off top. That's what I would expect. But I mean, I think that the Bitcoin will clearly do that, and then once we break that, we'll probably get a little blow off top. So yeah, I'm waiting for that to happen. Probably maybe next week.
It's definitely going to be very fun and interesting to see. All right, let's go through what happened last week in the economic reports. Canada, for the first time in a very long time, had a CPI report that was higher than expected. Canada has been one of the countries with the most dovish central bank, the Bank of Canada, and they've had much lower numbers than everyone else. All of a sudden, for the first time, we actually have a bump up in CPI. So this is going to mean that the Bank of Canada is now less likely to cut rates, and they were priced in to be one of the more dovish central banks. They're probably more towards a neutral here. So we did see the CAD get a little bit of buying off this. And then look at this. We saw the UK as well. The US had higher than expected CPI. Canada, the UK. As you can see here, we're starting to see inflation come back into the system. This is just 1 month. We'll have to wait and see. But it could be coming into the system again. With that being said, we then come over and take a look at retail sales. We're terrible in the UK. So this is what we don't like to see. Higher inflation and lower economic growth. And then this news, we haven't really been focusing on these services PMI and these PMIs much in the markets lately. But this one was a huge disappointment, and the euro really turned over, and same with the Swiss franc, because these are bad numbers. Anything below 50 is recessionary. And you can see where we were last month, and you can see that we have weakened substantially on all of these numbers just from last month. So Eurozone is starting to look pretty weak, and I think people are saying that the ECB is going to be much more dovish than they thought.
Hey, Rob, I just want to quickly add that in there, and just wanted to highlight that shortly after those number releases, we are seeing the futures market like now pricing in, like they started to talk about now 50 basis point cut. And I think that's what's going to be bringing or putting a lot of pressure on the currency because, while other central banks are kind of being on hold or sort of backing off from their outlook, now I think we're getting more pressure on the central bank to cut rates. So I think that's something that's going to be the highlight going into the next ECB meeting where they'll probably be expected to cut rates by 50 basis points. And similar thing for Bank of England as well. They'll be expected to cut rates. And I think that's something going to weigh down on the currency. So something to kind of keep an eye on.
Thanks, Ankit. And I wanted to point out, we had higher than expected inflation, but lower than expected retail sales in the UK, and the pound went down this week. We had higher than expected inflation in Canada, but look at these retail sales. Retail sales in Canada were great. Canadian dollar is definitely on the move higher. So all of these things, we're going to see them in the charts when we look at them, and we're going to see that the relative strength and weakness clearly mirrors what we see in the economic reports. For the week, last week the S&P was up 1.5%. Crypto, monster gain. Again, just a monster gain. We'll take a look at these. And also, look at these gains. Gold, 6%, 5.5% in a week, that's huge. Oil does that all the time, but gold does not go up 5.5% for the week, and it usually doesn't go up when the dollar is up as well. So big buying back in the precious metals. Let's take a look at the S&P chart. Now, if you listen to my video on Tuesday, so I want to go back through this because sometimes people don't watch all of the daily videos, so I wanted to really go through this because this is a very, very important thing I tried to share on Tuesday. Last week, these were the last two candles of last week, on Thursday and Friday. And on the Currency Room last week, I said the velocity that's happening, I said, I think we're going to break below this and test this moving average and also this kind of support line. That's what I said. I think that's what's likely to happen. So we got Monday, and Monday was, that candle means nothing. It means absolutely nothing. Tuesday, this candle, I came on Tuesday after the market had closed and said, look, I was wrong. I thought we were going to get more selling, and I was feeling more bearish. And on this one, I said, look, this right here, this combination of candles at a support line is a bull pullback confirmation. Now, as a young trader, it was very difficult for me to admit I was wrong because I thought very highly of myself. I thought I was smart, and I wanted to be right on my call because it feels good. Like, can you imagine like if we went down, like, oh, how great that would have felt, me calling it, saying perfectly what happened. Our egos are tied up a lot into what we see. And on Tuesday, I made a big point to say, I have to admit I was wrong and throw away my previous belief system. That is the most difficult thing in trading your first couple of years. And I said, look, I am fully committed to technicals. I'm fully committed to technicals way more than I am my ego. And when the technicals say buy, you gotta buy. And here's the crazy thing. The next candle, at one point during the day, we looked like, you know what? It was a big fat red candle. We were going to break. We broke below that 20-day moving average a little bit and almost broke through the lows here. And at one point, I'm like, oh my gosh, I'm going to look so stupid. But again, I don't care. I've looked so stupid in 27 years so many times. My ego's gone. By the end of the day, it had completely recovered and closed at the high. The next day, take a look at this candle. At one point, it was a big fat red candle. It looked like, oh, I was wrong again. And you can see it recovered. And here we have the candle on Friday. And now all of a sudden, it's like, oh, well, this looks very comfortably like a bull pullback at this point. But I wanted to point out, it didn't. It didn't look comfortable, but you had to trust in the technicals. Now, yes, technicals don't work all the time, but the reason we use them is they work most of the time. And so I really just wanted to spend some time here on this lesson because I said on Tuesday, I said, I have a choice. I can either hold on to my beliefs, my bias of what I thought was going to happen, or I can trust the technicals and throw that away and just go by and just go long. And this time, it has proven me right. Now look, technicals don't always work. Sometimes these are going to fail. But what I can tell you is over 27 years, the more I've followed technicals and the less I've followed my opinion, I've traded so much better. And now that I've done this for 27 years, it's not really that hard to do anymore. But at first, it was very, very difficult to do. Again, I wanted to spend a lot of time on this. Ankit, can you just take a minute to kind of go over your evolution to where, you had opinions and how technicals has just taught you to just be a robot?
Oh, yeah. I mean, I would say that, we all have opinions. And I think that's the hardest thing in trading is to, let the opinions go away. And, the best example I can give in current times, like look at US dollar. How many times have okay, I think it's going to be running out. It's going to be running out. Like that's my opinion. But when you take a look at the technicals, is still running. And I think that's a good testament to say that, like, when, if you pay attention to, the chart, that the price levels, I think they do a so much better job than, what I think will happen. And how many times I've had these moments in trading where doesn't matter how much experience you have. Sometime, you get a whole different thing out there. So I think having about checks and balances is very important. So you don't just trade the opinion, and you just don't trade the chart. You want to just have a good balance in there. But then overall, let your opinion use a confirmation by the chart. I think that's the one thing you got to do, and that does you so much better over time, because I so many times I can say something and I'm totally wrong. But the key is not to act on those decisions, because then I will be a lot more in the red if I just follow my opinion all the time.
Absolutely. And what you said, I love that. The chart needs to confirm your opinion. But what happened on Tuesday was the chart invalidated my opinion. And this is where you just got to throw your opinion away and go with the charts. So again, I did want to spend that long on this, because I just think it's such an important lesson for all of our traders to really get, is that you have an opinion. When the price action doesn't match it, you change your opinion. You have to just change your opinion, because we want to be on the right side of the trade. That's the only thing we want. That's it. All right, last week, you can see dollar, yen, pretty much flat, but dollar up. The big action was in the European currencies weakness, strength in the CAD, strength in the Aussie. And you can see the Kiwi lagged. The Kiwi lagged quite a bit, because it looks like a much larger rate cut is coming this week. When we take a look at the crypto markets, I've been laser focused on Bitcoin. Everything I've talked about, I said, look, I don't care about Ethereum. I don't care about Litecoin. I don't care about any of the others. Bitcoin was showing the most relative strength. And this is why you stick with relative strength, because you can see it did the second best here. Bitcoin Cash did a little bit better, but a 10% gain in a week, that was just a great, great week. I know I've been very, very happy in my crypto trading lately. I don't trade crypto a ton. I trade it about probably 4 to 5 times a year, but these are the moments I trade it. When it gets really fun and really exciting and there's a really strong trend, I love trading crypto in these kind of markets. And I'm sad that it's probably going to come to an end once we break through 100K. All right, well, let's take a look at the interest rates. As you can see here, we're really pinned right here at this 4.4. 4.4, we've been there for a long time. I don't see any reason to think it's going to change this week in a holiday, I'm going to say holiday shortened week for the equity markets and the bond market. Crypto and Forex is open. They're open 363 days a year. You get 2 days off as a Forex trader, Christmas and New Year's. That's it. But again, I see these going sideways. And here's the big run in crypto. And we talked about, again, the run, the breakout of 73,000 on Bitcoin. We got the base here, the breakout here. Here we are running up to 100K. And Ankit, I think you're exactly right. I think we're going to see a pierce through 100K. We're going to get that blow off top run. And I think we just settle back down. But 92,000 should be the next support level. 92, 93,000, somewhere in this area. That should be the support where we are looking for at the next entry point on Bitcoin. Next week, we do have one central bank. We've got the RBNZ on Tuesday. So if you take a look at this number, they are expected to cut by 0.5%. Now, this was just 0.25%. They've now been estimated to be 0.5%. That's why we're seeing some weakness in the Kiwi. The big question is, what do they say? Do they say, hey, we're going to give you a big size cut now and none later? Or is this a big size cut now and then there's going to be more later? If it's the first, I expect the Kiwi to bounce off of a 50 basis point rate cut with, hey, we're not going to cut rates anytime soon. If it is we cut 50 basis points and we're going to cut some more, then I think you're probably going to see some more downside in the Kiwi. Other than that, I don't see a lot of numbers. Maybe on Friday there's Canadian GDP. But other than that, I think that's really the only thing here. I guess we do have the PCE price index out of the US. That's another inflation reading. If this is a little hotter than expected, I'm telling you, that dollar is going to keep going with higher than expected inflation because we're already expecting rate cuts. If those get taken off the table, the dollar's going higher and interest rates are going higher. So again, central banks, RBNZ on Tuesday. That's the only one this week. All right, let's go in and take a look at all the currencies, score them from +3 to -3. I'm going to take us through the cryptos. Now, you're probably not going to be surprised because I've been saying the same thing for like 2 months. I'm really only interested in Bitcoin. That's the only one I'm interested in. And that being said, I think buying it here and buying it after 100,000, I don't think that's the right place. We'll get into it, but I think you want to get a pullback here to buy into Bitcoin. I think at this point you're chasing it and you're buying into the hype. And whenever you do that, you can make some money. But think about all the times people bought into the hype. They bought in when it's had a huge run. It usually hasn't ended well for people. Especially if you do that 100 times in a row, it's not going to work. Bitcoin right now is just a +3 across the board, +2 on velocity. I'm waiting for that pullback. I'm not going to be chasing it here. So the big question is, okay, is there any other cryptos that we could go after? Okay, Bitcoin Cash looks interesting here in the fact that it's got a high base, which I really do like high bases. But take a look at what happened. Again, high base, but it was broken, and then it sunk right back down. This is the kind of candle that I'm worried about our traders trying to get into crypto here on breakouts, because I think we're now closer to these blow-off top breakouts than true breakouts with some energy behind them. We've already moved a long way. Here's Ethereum. You can call this a base. If it breaks out above 34,000, is there another run here, or is it going to just be one of those shooting star candles where you get one move up and then there's nothing behind it? Again, I'm looking here at Litecoin. We've got a pullback, so this thing is underperforming, and you can see okay, it's a decent setup, but if Bitcoin pulls back, if everything else pulls back, then we're probably going to see pullbacks across the board. So look, I've loved trading crypto the last couple weeks. It's been great. It's been fun. I'm actually going to be on the sidelines a little bit, waiting for pullbacks. Take us through Forex.
Absolutely. Well, let's just start with the US dollar here. And again, going back to the basics, what's the chart telling us and what is my opinion? Now, this is running into an 8th week of a run. Do I want to buy something that's, this extended higher? Because, if you go back in time, I have to go back like 10 years or so, just to look back in the time where Currency Basket had that much of a consecutive run. So this is already on the outlier side. Now, the chart's not giving us a sign that it wants to really break lower. So again, we are at a very good, interesting, sort of interesting level here, where we could see a big breakout that could happen above that resistance level. So now that's the level that we have held, 2023, and 2024. So that would be a great level for this to break out, or if it's going to fail at that level. But remember, we need to see sort of a blow off top, like what we discussed. Where we see a big run higher, but then it just, reverses lower. Now, that will be the signal we get if the dollar is actually, done with this run. But based on the chart right now, we had a perfect pullback, 3 bars on the downside, and here we are back to the upside here. And again, now this is just setting up for a bull pullback here. So keep in mind, that's a very strong resistance level with good breakout. And then again, after that, we'll be in a territory where, the question is that where do we go from here? So even though it's an 8th week run, chart's telling me to stay long. And if you're looking for a slowdown or a short trade, I think you want to let the chart tells you that the prices are reversing. But as long as it could continue holding on to these gains, I think that trade continues on. Now, on the other hand, we have the Japanese yen, which you can see that is consolidating. So this is kind of interesting because dollar is in this 8th week of a run. And if you look back in the last few runs that we have, it really deviate from the Japanese yen, that correlation that plays out. You can see that Japanese yen is going sideways, where the dollar basket is the one that's keep running higher and higher. So I think it's kind of important to see that, yen is not the weakest currency out there. So we can't just automatically think that the dollar yen is going to, hit 160. Like that's not the trade right now. I think there's other currencies that are in play that is going to be more important to watch. So this is a sideways play. What we have noticed is that every time we see a risk-off play, the yen sort of strengthens. I think that will continue on, where if there's a risk-off movement in the markets, I think yen likely to outperform. But outside of that, this is just a sideways play. So
Ankit,
it's not a good.
I think the fact that the yen has not fallen any further when we are at new all-time highs in the stock market tells me the yen doesn't want to go down anymore. If anything, I think the yen has more likelihood of going up than down at this point.
Absolutely, I 100% agree with you. You know, this is again every reason for this to weaken, and it's not. That's a sign that hey, it shouldn't go back to the autopilot here and keep shorting the yen. I think that's not the big trade here. But I do like buying the yen on any risk-off sentiment. Now let's just talk about what I really like for a further breakdown. I think Swiss franc stand a chance to break that key support, and this is the range that we have for the most part of 2024. And I also want to highlight that the Swiss franc has been one of the best currencies in the last 2 years. I mean, better than the dollar. Swiss franc has done really, really well. So I think as we are seeing that slowdown in the eurozone, I think it's going to put some pressure on the Swiss franc as well. So I do like the next trade for this to break below the support. And if it does break the support, I think that's going to be a massive break onto the downside on the daily chart. So you can see that we got a nice breakdown today. I'm looking for a further extension, and especially if the market stays positive. Now that's another trade. Swiss franc does well when we're seeing a risk-off move. But now, if that changes, and if the market stays where they are, or continue to strengthen, I think the Swiss franc short is a good play here. So that's the one trade I look for in the next couple of weeks. Now with the euro, you can see that this thing is already broken below that key support level. So this is especially if we look at the weekly chart, we are now breaking some key levels. And even if you take a look at euro dollar, I can't believe that euro dollar is down to 104. And back in 2022, the euro dollar almost fell below the parity before it had before it reversed higher. So we are already having big moves in sort of some of these currencies, which kind of reminds me of 2022 because that was the last time where when the dollar was really hot, we saw a big movements happen where pound dollar got to the parity, euro dollar got to the parity. I think that's what we're seeing here. I see further downside, especially with this disparity between these the policies here, where the ECB is expected to cut rates more aggressively than the US, than the Australia. I think that's really what's really playing out here. So there's more. I think I expect some bear rallies in between, but I think those bear rallies would be a good shorting opportunities for the next month or two. Now, the British pound, which also is the last one that's holding down the fort, I think is also falling. Now, these are the currencies have done really well in 2024. So I think they do stand a little bit more chance to kind of fall because what we've seen so far this year is that the growth currencies have struggled, but then the European currencies have held very nicely. Now we are seeing the opposite where, the CAD is rallying. The Aussie still looks strong. I mean, Kiwi is the other one that stays weak, but then now we're seeing that rotation where European currencies actually looks a little bit weaker. So I think that my focus is going to be strictly on some of the European currencies. And these trend scores sort of follows that. Now, let's transition into growth currencies. Now, look at the Canadian dollar. Well, Canadian dollar has been very inactive for the last few weeks because again, we take a look at dollar CAD, and I talk about how dollar CAD cleared a clear resistance level, from 3 years, and that's kind of taking a little backseat here because the CAD is starting to pick up. And again, after that big surprise in this inflation, now we are, the expectations are changing where they were supposed to cut rates by 50 basis points, and now that's sort of diminishing. So if that's the case, then that gives a bit of a room for CAD to run and maybe catch up to the dollar because those two currencies have kind of moved in tandems. And I think maybe we're in the period where CAD, because the dollar looks so extended, maybe CAD can play a little bit catch up here. So I do like CAD to the upside. And then Australian dollar, which is another currency that you would expect that it would be actually doing not so well with that strength in the dollar. But I think if you really look at it, this is all these moves are based on the economic the central banks and economic policies. The Australian dollar is holding steady because RBA has been holding steady. So then we have the risk trends in place. So market's not falling apart. And I think that's the reason why Australian dollar still looks good. So it's not up to the races yet, but next week we also have the inflation number out of Australia. If that comes out a little hotter than expected or more than expected, I think the Australian dollar can easily take off with the risk trends out there. So now, last one is the Kiwi, and you can see that two opposite picture. Now, Kiwi is doing horrible right now, and that's because the RBNZ is way more dovish. Now they expect to raise by 50 basis points, and that's going to keep the pressure on. But like Rob said, the big focus is that what is their future statement? Where's their outlook for going forward? And that's going to dictate that currency. If they continues to be dovish, then I think there's definitely more downside risk in the Kiwi. But if they come out and say it's one, and then we'll look and see, I think in that case, the big move's already played out. The Kiwi is already weakening going into it. So these are the situations where you can actually get a big move down and then quick reversal. So I just want everyone to be cautious about this Kiwi here, because a lot of the prices are already getting priced in. Now the question is going to be on their further outlook, and I think based on that, we'll see how Kiwi does. But overall, I do like some of the growth currencies better than the European currencies.
Thanks, Ankit. And I also wanted to take just a second to talk about holiday trading. We're going to see it this week, and then we're going to see it the week of Christmas and then the week of New Year's. This week, we have the equity markets are closed on Thursday in the U.S., so you start to see lower volumes. And also on Friday, the stock market is only open for a half a day. So what typically happens is we get normal trading Sunday, Monday, Tuesday. And then by Wednesday, the U.S. session, we really start to peter out. But what typically happens is traders pick one currency. Now, most of the time in the past, it's been the Kiwi. And because the Kiwi is just it's a smaller float. And so it seems like people get behind one currency and they move one currency up. And it's usually one of these growth currencies. This week, I think it's very possible it could be the CAD. I kind of like these holiday weeks because if you can identify that one currency that everyone's piling into, you can actually make some decent pips on this. So I'm really watching the CAD this week, but I'm also watching the Kiwi. If the Kiwi can get strong, maybe that's the one, but Aussie's another great point. So look, it's right here on the board. You could be long dollar. I think you can still be long dollar. I just don't think it's the best trade out there. I like the CAD and the Aussie better this week, especially with this being a holiday week. What to be short? The European currencies. There's no question about it. And if we take a look at where the velocities are, European currencies got all the downside velocity. What's got the upside velocity? Aussie and CAD. So Aussie and CAD are going to be my favorite picks for the week. So I'm looking to pair up Aussie and the CAD against all the European currencies. That's my only trade setup I'm looking for the week. I'm not looking at any of the cryptos for this week. So number one on my list is I like CAD number one on the long side, Aussie number two. And on the short side, I like Swiss franc number one, I like the pound number two, and I like the euro number three. The only reason I'm putting euro number three is that euro already had a big break. So I want to see that bounce or base before I get into euro. So my number one trade for the week is going to be CAD Swiss franc. And take a look at this on a daily chart. It is a beautiful, beautiful breakout of resistance since July. Since July, when we start to take a look at, okay, where are the next levels? So next levels here at 64.50. And that's a 0.8% return after that. So I think there's a lot of room here to grab a trade. If we come down here to the 4-hour chart, it's already there. It's already there. It's already breaking out. This is where it's sometimes difficult when you're getting these breakouts. You say, I want to wait for a pullback, or I want to wait for a base. A lot of times they don't give you that opportunity. And you guys have all seen that before. This is where I really love pyramiding, where I say, hey, I want to take a one lot trade. I don't want to take 100,000 trade, but I'm going to buy 33,000 here. And then I'm in it. And then if it does pull back or base, then I can add into it. If it doesn't, then I can still add into it as it goes higher. But right here, sometimes it's tough to go with your full position because we could pull all the way back down to 63.50, 63.60, you'll probably get stopped out on that. So this gives you a way to get into trades and comfortably sit through pullbacks and bases. You're not in your full allocation yet, but you're just building into it. But I like this one quite a bit. The daily chart looks great. I mean, weekly chart, got a lot of room here as well. So everything looks good on this one for me. So this is my number one trade, CAD Swiss franc. Ankit, what do you want to take a look at?
Hey Rob, well, a couple of trades I want to take a look at. So pound CAD, again, we had a great call last week, which has done really well, and we've been short this whole time. Now I'm getting questions that, hey, what's next? As you can see that it's kind of hit or getting closer to the target that I had initially, all the way to the downside. So, RSI is oversold. Was the negative score is -3. Again, these are the ones like, Rob said, like, they look extended. It's hard to get in. Any pause, any sort of basis. And again, 4-hour chart does a great job at this one. That's what we're going to take a look at, pauses and bases. And that'll be a great time to get short. Do they look extended? Absolutely. But I think these are the areas where you just want to trade that price action and expect some bases in between. And then what you want to do is that you want to just, put another sell stop and see, okay, if it breaks this level, I want to get in again. But things will take a pause a little bit, and I won't be surprised that pound CAD, maybe take a pause, and then like Rob said, maybe Swiss franc will be the better one going into next week. Now the other one, Rob, I had Kiwi CAD also last week, which has also actually done really well. Now same thing. There's no real signs of slowdown. This is moving lower. I think this can also it's getting closer towards the support area. So I think this is the trade that probably gonna have another leg down, especially going into that rate cut. And after that, we'll see, if that sort of reverses a bit here. But again, this is also the one that's doing really well. Now, the last one I want to bring up is Euro Swiss franc. I've been watching this trade because this thing is, look at that rejection that we had today. So if you want to pull up daily chart and or even a weekly chart, you'll notice that this is a big level of support. Again, this Euro Swiss franc has never been lower than this level ever in the history. I'm still surprised at the fact that they let that currency pair go below parity. But you can see that we bounced aggressively back in August from that level too, and that caused a nice rally back in August in this Euro Swiss franc, which is again telling you that Swiss franc probably be a better short in that time rather than the short in the euro. So I think what we can see next week is a bit of a rotation. Maybe we'll see a pause in that, or maybe some base in the euro, and maybe Swiss franc will take a little bit here. So again, if you're not sure, should I go with the euro or should I go with the Swiss franc? I think this is what you should look at. Take a look at what the Euro Swiss franc is doing. And then based on that, you can do the pairings. Because I think the big question really is that, hey, is the euro going to be a better short today or next week? Or is the Swiss franc going to be good short? Or is it going to be the pound? And I think when you look at these pairings, it'll actually help you being in the right currency pair that's actually moving in that time frame. So I think that's what we're going to focus on. But I think we're pretty clear on what currencies that we want to be long on. I think CAD definitely looks better. We can also take a look at some of the dollar pairs, but I think they look very extended to me. So the next one I think is the Swiss franc that goes on the top of my list here. So that's the game plan. But again, keep in mind is that next week we have this holiday shortened week where things will go quiet. So we have that kind of thing working against us where you want to be sure that how long you want to be holding the trade for. And then sometimes I don't want to open a position on a Wednesday that I got to hold it through Thursday. So either I'm active early on a Monday, or I will kind of wait till Friday or maybe the following week. But just because we have the holiday in the middle of the week, you want to be careful when it comes to your time frame. Back to you, Rob.
Before we wrap up, I want to just announce that we are on break this Thanksgiving. So we always take Thanksgiving week off. And let me tell you exactly what I mean by off. We are not going to be doing videos, and we are dramatically scaling back things like coaching. We are still here, live traders. We are still have full support for you. We're just giving our staff a little bit of a break from our daily routines of making videos and stuff like that. We're still around. We're still on email support, so please don't hesitate to reach out to us. But there will be no daily videos this week. So I just wanted to make sure that is known. All right, that is the Currency Room, everyone. Have a great week, and happy Thanksgiving to our U.S. traders. And everyone else, it's just a regular week for you. Goodbye, everyone.